All right, good afternoon and welcome to the end of day review for today. And today is October 7, 2024. It's a Monday, the first trading day of this week, and this week is the second week of October. We are in the fourth quarter, the last quarter of this year. So we are right here, and also keep in mind that we are in the Monday after non-farm payroll last Friday. So the price action is in the first 2 hours it kind of very range bound. So if we trade in that first 2 hours, it's very hard. And we tried it today, and we learned a huge lesson today. And that is one thing that we need to keep in mind. Always keep the price action in the context. We need to be aware of where we are at in terms of the price action or order flow or whatever you want to give a term, for lack of a better word, basically order flow or market structure, whatever. Yeah. So we have to be aware of that. So it's easier for the trade. And also, over the weekend, we learned a great deal about the ICT price delivery model. We looked at that a couple of times. We did do some review on that, but it very loaded, so we couldn't get it first times. But we feel like we start get the sense of it now. So we want to share it with you today, and also we're gonna apply that to the price action today. But just keep in mind that the day after the non-farm payroll on Monday, try not to trade in the first 2 hours or so. Need to see what we are anticipating. And if we're not clear, then just sit in the sideline. Don't try to engage. Alright, so we are in week 41 now. And we are right here, the second week of October. And we will basically we in the last quarter of this physical year. And the next economic event we're looking for is gonna be October 15, which is the CPI data. We want to see. So basically, next week we're looking for the CPI data on October 16, like that. That's the actually October 15, huh? 15, not 16. Yeah, Tuesday. Oh, how come the CPI come out on Tuesday? We thought it's gonna be on Wednesday, September 11. Yeah, Wednesday. But why this month it come out on 15? Very strange. Did you see that? 15. Normally it's gonna be on Wednesday. Wow. Let's see. November 13. November 13. Hold on. November 13. Yeah, Wednesday. So we don't know why this month it's gonna be on 15, not 16. Very strange. You see that? Normally it's the second Wednesday of the month. Anyway, it is what it is. So okay. So when we go in today, we have here's what we thought when we go in today. Here's the screenshot we take in a high time frame, and we took this at 8:17 a.m. Eastern time right there. So basically we see the range right there, the range. So that is the range that we're looking for, and we're looking for that it gonna be touch this. You see that a lot of time it touched reach range, and this low of the range with 57.37, and then it what is a reverse. And we believe that last night when we saw the setup, we believe that it's gonna reverse. So see, so it's reverse back and forth in the risk range, because we see a reversal happen right here. Whenever we see the reversal, it's gonna go into a consolidation. That is the order flow right there, and that is the ICT price delivery model. Let revisit that and make sure we're on the same page. All right, so basically we return to a ICT famous price delivery model. So basically everything right here, you see that it starts with consolidation, and you see the red circle around that. From there it start a motion, right? Because the consolidation is started all, because that where the market maker allow trader, investor, place their order. As soon as they see order in, then they got to make a move, which is the expansion. And then from expansion, it's gonna either go to retracement or go to reversal. And keep in mind that after reversal, so far we observe it go back to consolidation. And one thing that if we see that it will never go to expansion and then go to consolidation expansion. Keep that in mind. That will never happen. And we will see that. At first it's very hard for us to understand that, but look at the chart. We will show in a moment you can see the logic right there. And sometimes we can see the expansion, retracement, expansion, retracement, expansion, keep going on right there, and then it turn into a reversal, and the reversal gonna go to consolidation, and then from consolidation it's gonna expansion, either up or down. And normally after the expansion like that, it's gonna be reversal. That's the idea right there. So now go into some of the example that we catch. All right, let's go. All right, so right here, this is based on the ICT price delivery model right there. We can see. Let's start with right here, the consolidation. So here is the daily chart of the S&P future right there. So we have the daily chart right there, and you can see that for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost 10 days, 2 weeks for consolidation in June to July right there. And after the consolidation, we see its expansion, which is a leg up right there. And after the expansion, in this case, you see that its expansion have 2 legs right there, right? First leg right here, and then it make a second leg right there. And right after that, second leg, it do a what? Reversal. Or you can say it's retracement right there. You see that? So this is a retracement, and then it make what? It reverse right here. Basically, retracement or reverse right here. This is retracement, right? And then it make another leg right here, which is the next leg down right where, which is retracement, and then it turn into. So the first leg down we can still call it a retracement, and then the next leg down. So the whole thing right here, the next leg down gonna be reversal right there, And after the reversal, what happened? It go into the consolidation right here. So consolidation from 1, 2, 3, 4, almost 5-day consolidation, a week consolidation right there. And after the consolidation, it's gonna make what? It's gonna make expansion move in one more leg down right there. Expansion, which is another leg down right there. So we never see right here consolidation and then expansion and go to consolidation. No, it's not gonna go to consolidation right there. It go through it go to retracement, and then it go to reversal, and then reversal go to consolidation right there. Yep, that's the point we try to make right there. And right here, after consolidation, it make what? It make a neck leg down, which is another expansion. Whenever you see right here, there are consolidation, and the price leave the consolidation, which it make the expansion move. Then right here, you will never see another consolidation, right? It's not gonna consolidate over here. It will do reversal. Yes, that's the beauty right there. Expansion and reversal. It will not make a consolidation right here because it already come out of consolidation right here. So after it make this expansion, it gonna reversal. Yes, that's what exactly happened. You see reversal right here, and after this reversal, it goes to consolidation. You see that? So the consolidation is gonna be expansion, and the expansion go reversal. Reversal go back to consolidation. It never go from consolidation, expansion, and go to consolidation. No, it have to be reversal or retracement, but most of the time it's going to be reversal go to consolidation, which is now it makes sense to like right here. At first it's very hard to understand, but if we slow down and take little by little, day by day, we will get better at understand this. At first, we're so overwhelming, we have no clue what it is, and it's very confusing. It takes time. We just, over the weekend, we try to look at it again. I think we did review this many times, and we're gonna refer back to this many times in the future because we're gonna understand it like in the back of our hand, and it will become our second nature. So we know exactly what we want to see and how price gonna, formation. So that's the reason why we can anticipate a setup. So that's beautiful right here. So we go back to consolidation, and then after the consolidation, you see what? You see a expansion right there. So the price leave what? Leave the consolidation. You see right here the same way. The price leave the consolidation, then expansion, and it's gonna reverse. Same thing happened right here. The price leave the consolidation, expansion, then it will reverse. Yes, it will reverse. So expansion, right, it will reverse. Or it could be right here, it's retracement, and then it make another leg down. Yes, but look at here, you see that? After the reversal, it go back to consolidation, and consolidation gonna make a what? Expansion and reverse. And after the reverse, it go back to consolidation. Same here. After reversal, it go back to consolidation. After reversal, go back to consolidation right there. Yeah, exactly right here. After the reversal right here, right? The first leg is retracement, and then it make a second leg down, which is a reversal right there. Reversal, which is take down all the one that at this consolidation, right? Take the buy sell side. Then you do what? A consolidation, and then consolidation it make what? Expansion, and it reverse. So that's beautiful. We can figure out, we understand this mechanism behind the price delivery model. Then it make us see the price in a different level now. Okay, now go back to what we have this morning. Right, what we have this morning at 9:30. So basically it's 9:30. This is the regular trading hour, right? Which is not including the pre-market. So we see right there, right? That's the screenshot we take at A33, which is 3 minutes after. So we see this setup right here. So we see the gap down, the ICT model right here. Let's look at the ICT model here. Right, see? Opening range gap, and you see the gap down right there. So we anticipate that it gonna what? It gonna rate the low, of the PM, or the low of the previous day, the low of the New York PM, or the whole day right there. Then it gonna retracement or reverse, go back. So that's the reason why we gonna sell. We try to sell at 9:30. And also, we see also right here. Yeah, that's the reason we sell, and we say no way, because we see that model, so want to sell. That's the right idea. We anticipate the direction, right? But the lesson we learned for today is that's gonna be a good entry at 9:30, and we find out that's not a good entry. We have to wait for another 2 hours. So the best entry come at 11:30, and here's the why, and we learned a huge lesson right here. So basically we right here. Here's the why. Here the why. So we have to wait until what? Until 11:30. You see that? 11:30. We go in at 9. It's too early, and we got stopped out. We did re-entry at 11:30, and then we put our target is the PM. Friday PM low right here. But you know what? We got a little bit nervous, so we take a quick profit, and we pay we make a huge error right there. Eventually it go down, it take the low, not only the PM, but the whole low right here, and it did touch the low right down here, the 37 level. That's the 37 level right here. It check all the way here. You can see that the first target right here is the PM low, and then the last target, right here the PM low, and another target is that it all the way down to this level high time frame right here. You see that? So that's a huge move right there. So the ICC only target is at at 1445 right there, at the 57% level right there. Okay, so go back to this this setup. So we have the idea, we have the right idea, and we entry at 9. It little bit too early. We have to wait, and the perfect is come at 9:30 when it flips, and you can see it right here. So at 9:30, it gives us at 11:30, which is 2 hours after 9:30. We have a beautiful setup. At first, if we base only on the ICT right here, we enter at 9. But now with the knowledge about the auto flow or the price delivery model, then it makes sense that we have to wait right here, right? Because this is the expansion move, and this one is reversal. And like we say earlier, after the reversal, it's gonna come back to consolidation or retracement. It will never reversal right here. It will never reverse right away. That is the key. It will never have reversal right here and then it reverse back. No, it never. It always go to retracement, or likely the most of the case it goes consolidation and then it gonna expansion. Expansion down or up, or retracement. We haven't seen the retracement. A little bit retracement right here. We can count the retracement, but we put in the range right there at this candle. You see the range right there, it consolidating around that, and then after that it gonna expansion down. That's exactly happened. It take all the sell side liquidity down here. Yes, so this morning we don't have this knowledge, but now we have this knowledge, so we will never go and trade at 9:30. We have to wait for the consolidation form and look for the setup. Look for the setup to see whether it's gonna expansion down or gonna expansion up. Yes, it ends up right there. And look here, it gives us some clue right here. We see the fair gap down right here. That can give us a signal that it gonna be what? It it gonna be down, because a huge gap right here tell us that the market maker already tell us it's gonna be it's gonna expansion down. Right here it just build the liquidity before it's flushed out. Yes, that is the note we put right there. You see right there, the order flow is go from before this morning we don't understand order flow, but now we understand now. So basically it's gonna expansion right here, expansion, right, and then it go to reversal, and then from reversal it's gonna go to consolidation, and then it's gonna be expansion. That's the order flow. So don't go in at 9:30. Wait for consolidation, and then wait for the setup in order to know whether expansion down or expansion up. But the market maker did give us some idea. We see the fellow gap right here, it's gonna be bearish right there. And also we see the setup right here at the level, you can pick the level, either 81 right here, which is the range of the candle right here, or pick the 9:30. You see right here, you see a double rate or double buy side liquidity rate, or you can say the stop run right there. It run the stop at 9:30 twice, 1, 2. Whenever you say double rate right there, that is the best setup right there. And also look at the level a little bit low right here. You see the level 83.5, 81, I think 81. Oh, we make type right here. It's not 81. I think it 83. So it's 83. 83 right here. It has to be 83. Okay, let's fix that real quick. It should be 83. We fix later right here. But basically it's 83 right here, the high of this candle. 83 right there. You see what? You see the break test from above and reverse. It did twice. Break, take above, and reverse. So it's called double right for breakout. It's very strong. That means that it's gonna be flushed down real hard right there. That is a very strong signal. Then it's the beautiful setup if we understand. And then it go exactly, man. There's no doubt. We see that. So expansion, consolidation, and gonna be expansion right there. Understand? That will be the key. And here's the target, right? First you target at the low and hit that target at 14:30, but if we wait for another 15 minutes, it will hit all the way here at 12:45, and then it retraces right there. And you're gonna see right here, yeah, right there, where Bright come from. Bright come from the consolidation. So it's gonna be expansion, and this gonna be what? It's gonna go to retracement or reversal. It will never go to consolidation right here, especially after it hit a high time frame liquidity pool. It will reverse, or it's gonna be retraced very fast. Just keep that in mind. With that in mind, we can capitalize on this move. We can go and retrace at the high of this candle of the outflows right there, and we did do that trade, yeah, at this level, or at least it's gonna go here, or I mean not at least, but at most it's gonna go there. So we place on the retracement because we know it's gonna retracement. It will never go to consolidation, because right here the price already expansion. and it leave the consolidation, then it will never go to another consolidation. So basically, it will not have consolidation, expansion, and consolidation. No, it will go to retracement or reversal. Remember that. At the price leave consolidation, expansion, it's gonna go to retracement. In this case right there, or reversal. It will never go back to consolidation. That's just the green arrow right here. It never go back here. It go a couple of rounds and then it go back to consolidation. So normally the reversal gonna go to reversal gonna go to consolidation. That's the key for us, So we kind of hash out our understanding right there. So it's the beautiful setup for today, and we learned a huge lesson. Let's look at the trade we take so we can see what our lesson we learned for today. Yeah, before we go to the live trade, we look one more time how we apply the 4 stage of the price deliver Libre model: consolidation, expansion, retracement, and reversal. So right here now on Friday, which is the non-farm payroll, you see that here's the consolidation, and after the consolidation, you see on Asia section is expansion. It take the buy side, and then it make a retracement on the London. You see that? You see that? Yes. After it make the retracement on London, what's gonna happen? It gonna expansion. You see the expansion, huge right here, expansion. And after the expansion, you gonna see what? You see the price leave it here after retracement or consolidation, it's gonna be reversed. So now we know this, then next time we see that, we will short right away. We don't have to wait, because we know that it's gonna reverse. Because after expansion, because the price leave the expansion after a retracement or consolidation. In this case, it leaves the price from retracement. Then it's gonna be reversed. The better is it leave the price from consolidation. But in this case, the expansion come after reversal. You see that? The other case, we see that the expansion happened right here. We see that the expansion happened after the consolidation. Then it reversed. The same right here. The expansion come after the consolidation. Right here, the expansion come after the consolidation. But in this case, the expansion come after the reversal. Either way, it's gonna be the next move gonna be reversal. Exactly. And look, after reversal, it come to consolidation. You will never see it reversal right here. Because why? Because there's not enough liquidity. The market maker have to wait for liquidity to build up before it make a next move, next expansion. Either up or down. After the reversal, it's not gonna make a reversal right here, back there, or make another leg down. It don't. It have to go consolidation, and then from consolidation we have to wait for the setup, for breakout setup. Very patient on here, because it's very tricky to trade after a reversal, because the market maker look to what? Look to build liquidity. So it may take 2 hours, and so far we see it take 2 hours. You see right here, it's around 10 o'clock, or look around 2 p.m. You're gonna see a setup. Exactly like today. Right, today we have to wait right here. Just today. You see that? Today it start at 9:30 right here. We have to wait about 11:30, so more 2 hours. So whenever we see the reversal happen and go to consolidation, we have to patiently wait for 2 hours. Don't do too early. At least 2 hours and wait for the setup. Yes. So it's very critical. We need to go review this every day. So it become our second nature. It become like a back of our hand. So we can read the price at a different level now. And that's the beauty right there. Just focus on the craftsmanship. Don't focus on the win or loss. That's just byproduct. Focus on the ideas. Focus on the concept. All right, here's the first trade we take, right? It's a 9:30 right there. So basically, we already say before, we're gonna go in and sell at 9:30 because the ICT model open range, opening range gap right there. So we see the direction that it's gonna come down, but the question that we owing at 9:30 is too early because we don't have the knowledge of the retracement. Reversal right here, it's gonna go to consolidation. So we better wait for 2 hours. That's the lessons learned. We learned for today, and we trade this without that knowledge. But now, at first, it go into our direction right there. Beautiful. It give us almost an R right there. We thought that it's gonna go in and drift, the previous day low right there. But it not do that because it never go from reversal go to reversal. It have from reversal it must go to consolidation. And with that knowledge, we're not gonna do that trade in the future. But without that knowledge, we jump in. And at first, it feels like, we on track, but that's the trap right there. The trap people go short right there. And let's see. And the second candle, we thought, wow, maybe not the first candle, but second candle, it's gonna be follow through. And it did not. It flipped back. You see that? And let's see, wow, and they come back. You see, at one time we have 1 R right there. 250 is 1 R. we can take a quick profit right there. But anyway, it's better for us to understand order flows and how the price delivery is better than just the win and loss right there. That's a byproduct. As long as we improve our understanding of the mechanism behind how market maker deliver price or make the price, right? That's how they make the market right there. Market maker. Then we're in a good shape right there. But then the win and loss is just byproduct for us. And you see it flip back. Okay, so right here we feel something happen. So basically we say, wow, that means it's break. And test from below right here. You see that? We thought it's gonna take below, it's gonna reverse. So let's see what we do right here. We got a little bit nervous now because we go short and then it go again our position. So we move to break even. And go with break even. Let's see. So we break even, we take it out. So from 2R to break even, but not the deal. We try to understand the price right here. So definitely the 9:30 confirm us that it's gonna be a range for a while. Right? It's gonna be a range around this level. So you see that it's at the retracement and then expansion reverse. It go back to that range. And now we understand that we have to wait. And now we go long again. We say what? Okay, starts below, it's gonna break and make a let up. We see, okay, the retracement, right? You see that this is a reversal, retracement, and then expansion. That's what we see right here. And that's where we engage a long trade. And let's see how it's play out. Boom, it go into our direction. And right here, the mistake we make right here, we thought that, oh wow, it's gonna be go to the next leg down. That's which way we increase the size without knowing that it's just a consolidation. And it's very frustrated if we don't know. But now we know, then the frustration will no longer there because we understand that it will go to consolidation consolidation, and we need to avoid. We're not gonna trade after wait for the consolidation to finalize and then wait for the setup. You see, so okay. So how do we get out of here? So we increase size right there as that the mistake. Okay, so now I think we yes, we move to break even to reduce the size. Yeah, we feel that it's not right. I think we click on break even. We get out of there. Oh, we take quick forex. We feel like it's not right. It's at rate the buy side of the candle. Yeah, I think we take a we sell off. We reduce the size right here. Yeah, I think we reduce the size right here. Go back to side one. Yeah, we close it. Yeah, yes. So we close right there. We take a loss and close it. It doesn't make sense. Right? It has to be continued. Because if we feel like this is gonna be a trap, it's gonna reverse back, right? Test and break and reverse. That's the type 2 reversal right there. But anyway, after we saw it flip, then we said, oh, now it's flipped. Look at the candle, so strong. It break from that range, so it's gonna make the second leg down, leg up. Then we increase the side. That's another error we make right there, and we pay for that. You come back, do you see that? We take a lot right there. Yes, take a loss right there, and then boom, from there, we short them. That's right, but we short them, but we put the stop loss too tight right there. We got stop out. You see that, and we increase the size. That's the the mistake, a third mistake we made. So this is at 9:36, 9:30 candle. Yep, and we short them, all right. But lots of frustration right there. But now we understand that avoid the frustration, because we know that the reversal gonna go to consolidation, and let the consolidation play out. You see the double, double rate liquidity and double fall break, then you go in at 11 right there. See, and now we thinking short them, right? That is another error right here, because we have no clue how the markets maker manipulates or make the price. So don't go too early right here, short too early. Yeah, we pay the price. If we short right there, we have to put the stop loss a little bit bigger and don't increase the size. And now you see that, we thought, wow, maybe what you see right here, break and what? Test from below, break and reverse. That's type 2 right there. We thought it's gonna be a type 2 reversal. That is, switch back and forth right there. And then at one point it go to our, direction right there. And so we take profit that if we want to. But no, boom, it take it out. You see that? It take it out. Boom. And now we should switch to short. You see that? A lot of confusion right here. And I'm glad that, we took this trade. It really teaches us a lesson right there. If we don't took the trade, then the lesson we learn will not really lively. Right? Here we make mistakes, so it really impact us. It gives us the emotion impact, so we learn from that. Otherwise, it will not. It's like drive-through, right? But now we're really into that. You see that? So we thought that it's gonna be fall out, but amazing. You see, it flipped. Wow, now we see that, wow, it flipped now, then for sure it can go long. That's why we're aggressive, increase the size right there, right away. But here's the mistake. Now we learned that the flip have two kind of flip, the real flip and the fake flip. This one is a fake flip, fake flip of 11 hour right there. And we did take a screenshot of that. It helped a lot. Where the flip screenshot? Yeah, here we take a screenshot, but right before that, right, we see that, oh, we thought that it's gonna be type 2 reversal. Touch from above, break and reverse. That's what we anticipate. And that's right. And then we see a flip that give us a bigger confirmation. That's why we aggressive go in and increase the huge size right there. But that's our mistake. We learn that there are two types of flip. One is the fake flip, and one is real one. In this case, fake flip right there. You go long, you get big trouble right here because it make consolidation around there. You see, it make the consolidation around this level. That's right there, and then boom, it create a full breakout setup right here. Break, touch from above, and reverse. Right there. So the flip is just a setup to go short, not to go long. You see right there, the flip right there, it is set up to go short them, which is a type 1 reversal right there, very strong. You have two of them, 1 and 2, and now you have double rate the buy side liquidity right there. So before that we have no clue what we're doing, but now we have a sense, the idea that how the market maker manipulates the price right there. So whoever goes with the flip, we would love to trade a flip, but now we understand there's a difference between a fake flip and a real flip. If you want a real flip, wait for it low right here after it rip the liquidity. Don't go for the flip when it's in the consideration. Yep. And after the reversal, so it goes to consideration. So big watch carefully. Give us another 2 hours in order to trade them because they need to build up the liquidity. The flip is just, the bull trap right there. Trap who want to go long. And that's exactly the trap was right there. And we say, wow, it's gonna go long. But the minute we put our hope in, we got crashed. Our hope, we can take the profit right here if we know that it's gonna flip back, but we don't know. We anticipate it's gonna be second leg up. But we got fool. Yeah, let's look at the next video after this. Yeah, so right there we see that, and we didn't take profit, and boom, we pay price. You see that? We moved the stop loss. Okay, I think we did take the profits. Yes, we did take profit when we see the flip back right there. Yes, we sell. We reduce the site. Yeah, we reduce to site 1 and then bring close to there. Perfect, right? That's right. And now we go short, and now we see the setup right there. Break, touch from above and short. Perfect. Right, we aim, for the low of previous day PM low. Perfect. It goes to our direction, and you know what? And right here we get a little bit nervous. We should let it run. We have a perfect right there when we short them, and we let it run. It will run. We have a huge scan, but we get nervous right here, my friend, because we don't have a conviction, but now we do. Because it's gonna be with all this sell side without here. We get nervous, so we get our take profit early from here. See that? Can you believe that? We take and just go back to break even. But if we let it run, we see the candle right here. we're afraid that okay, it failed to break that candle. That's the reason why we get out. But we understand that now it's just a trap. We should let it run. So we have a good entry right here, but the execution for this is not good because we don't understand the liquidity one. But today, after today, we see that we know exactly what we should do next time. Which is, I think we put into a very comprehensive right here. Yeah. So now we know we will stay in a trade because we know the setup that the gap down right here, right, the gap down right there, it's gonna become sweep all this liquidity down here because you have a retracement and you have the reversal. So it goes to consolidation, it's gonna be expansion, and you have a huge liquidity right over here, and we see the double fall breakout there. That gives us a huge property, and we didn't know. So that is the mistake right there. We should let it run all the way down here, and I think after that we take a long trade there, which is very the errors we make. We thought that it's gonna be retraced from here or reversed from here because we see a break, test from below, and reverse. So that is a false setup right there. We have to understand the order flow. Otherwise, we go in and go long too early. You have to let this complete the move, the expansion. The expansion is not finished yet, so don't go in. And we go in, we pay the price for that. Boom, you see that? Yeah, but if we let it run, when this trade, then we have a huge move right there. We have the huge moves. Yeah, we have the huge move right there. You see that? We entry right here, but we get out around here. That's the mistake we make. We should have it run all the way right there. So why is it go down there? Because the setup right here, consolidation is an expansion, and you have a huge liquidity out here for expansion. If we look at the candle daily time frame, it have to hit this level. On the daily, you see that right there. You see that the range right there. When it coming down, it's gonna hit at least this level, and then it may go hit this level also, and exactly hit that level today. All right, I think that's it for today. We go over time a little bit, but thank you for your time and interest. We're always grateful for this opportunity. We love what we're doing, and the success is coming our way. Or we do what we love. So, and day by day, little by little, in every way, we're getting better and better. Have a great evening, and see you tomorrow.